In this video, I'm going to show you which dividend stocks I'm watching in June 2020 in under 5 minutes. Disclaimer, I'm not a financial advisor. If you seek financial advice, please see a licensed professional. The stock I've mentioned a lot on this channel recently is Sage, a technology company that offers business products / software for management and finances. They have a dividend frequency of 2 times per year and a dividend yield of 2.51%. They've consistently grown their dividend for over 20 years at a growth rate of 14+%. And they have a fairly low payout ratio of 55%, which means they have got room to increase their dividend and reinvest profits into their company in the future. 55%, which is an interesting number because that's actually the same amount of people that aren't subscribed but watch my videos, so please consider subscribing. Their balance sheet is extremely strong and they have more short-term assets than they have short-term liabilities and long-term liabilities. However, this is not combined. But either way, this means they have a low amount of debt and they can easily deal with it. I'm actually going to set a personal price target of around £6.20, and if it goes beneath that, I'll definitely be adding more to my dividend growth portfolio with Freetrade. A repeat offender in the series now is actually BP, British Petroleum, with a dividend frequency of 4 times per year and a dividend yield of 10.65%. The next dividend is due to be announced around June/July, and this is actually why I'm going to be talking about this company. It's actually a different reason for last time, because this time I'm pretty confident, like what Shell did in the last month by cutting their dividend and using the keyword reset. I believe BP is going to follow suit, and in fact when they cut their dividend there will be a significant share price drop and a great time to get in. So I might try and time the market, which isn't a good idea, but I might sell my BP shares mid to late June, and then when the announcement comes, which I'm guessing will be around July, where they've cut their dividend, I might reinvest into it. But this is a stupid move, honestly. This is more of an experimental process. Please don't copy what I'm doing. They have consistently paid their dividend in the last 20 years, but have cut it once. And that was due to the BP oil spill crisis, which had cost many lives and many billions. Although, however, they do still remain unprofitable. This is because of recently and the fact that oil barrels and crude and Brent have all dropped in prices due to the oil price war between Saudi Arabia and Russia. And this means they will have to take up debt to pay their dividend, and so that is why I foresee a cut coming in the future. And in fact, their payout ratio is almost uncalculatable, and I think the best move for them is to certainly cut their dividend. If they take out more debt to finance this dividend, they're ultimately going to get behind in the long term against other oil majors. And I'm not going to set a price target for this one because honestly I'm unsure. What I can be sure of, and I could still be wrong, that they will cut their dividend, and I don't know what the price will drop to at that point. And if you've enjoyed the video so far, make sure to stay tuned, because on Wednesday at 5 PM, I'm going to be showing you my June dividend stock pick that I'm buying in that month. Another stock I'm going to be watching is actually quite a defensive stock this time, and it's actually the multi-utility provider in the UK and the US. National Grid currently has a yield of 5.21% and a dividend frequency of 2 times per year. And they've grown their dividend in the last 20 years consistently by an average annual percentage of approximately 8% per year, 4 times the amount of inflation, or the inflation target for the Bank of England. And this makes it a very stable income source in recessions, as they haven't cut it during the financial crisis of subprime mortgages in the 2009 area, and also the dot-com bubble, in which it was 1999. However, they do currently have a payout ratio of 112%. More than what they earn in a year is being paid into their dividend. I don't think it will be cut or suspended, but I do think they will take up some form of debt to pay their dividend. And I believe this is due to the fact that they've suspended debt collections in the US at the moment. I believe that was quite a source of income they had going. As for utilities, I imagine the demand has remained the same. And I'm going to set a price target of less than £9. I believe that it should be at fair value of £10, and I think going for less than £9 is a fair time to buy in for its high enough dividend yield and stable payments. I also think it can also work as a hedge as far as equities go. So if there's some uncertainty in the stock market, most stocks will lose value, but National Grid will see a slight rally in value. However, if there is a massive market sell-off, it's not void of that, so keep that in mind. And if you've enjoyed the video so far and you're interested in 5 high-yield dividend stocks I'm buying right now, then click the card at the top right of the video. Thank you for watching. I'm Osborne Foreman. Have an awesome night.